Hello all, welcome to Order Flow analysis of Bank Nifty for 3rd April 2023, that is Monday. So let's look at the macros first. So since it's Monday, let us have a look at the dollar index from a broader time frame first. As we see, dollar index on a daily time frame is actually after hitting its previous swing high, it is getting rejected. So this was the previous swing high of dollar index. So at the same zone, dollar index has got rejected and it is coming back to probably test its you know this recent swing low. So it has created a swing low here, and post that it is also retracing. I think it's almost retraced. So dollar index in the short term is in uh, a downtrend. So this is the broader thing which you must keep in mind while looking at dollar index. I think I had not shared this before. Looking at the daily time frame and getting the what is the short term trend of dollar index, very crucial for the even the short term trend of indices. And going back to the 15-minute chart, we see that our markets were closed on Thursday. So our markets were closed on Thursday, and dollar index, fell significantly on Thursday. So this had to be factored in to our market, and accordingly, on the next day, Friday, I think our markets factored this by a good upward rally, gap up and upward rally. So this was a kind of retracement for dollar index overall in this downtrend. And yesterday, overall dollar index, that is on Monday, dollar index after this pullback, it started to fall. So dollar index overall is still in the downtrend, and yesterday also it was in the downtrend. So the bias for the indices broadly should be on the positive side. So this we must broadly keep in mind as a macro thing. And coming back to the order flow for Bank Nifty, see, as discussed, the first candle is opening at the previous day, almost high, and it is with a very, it's still a very low delta, and there is a loss of some delta. I mean, not much, although delta is low, and some delta is getting lost. So candle is having both upper wicks and lower wicks. So it is indecisive candle. The first candle does not give any directional bias as such. So, but the second candle, if you observe, this is a strong confirmation in terms of it is having if coming from a yesterday's perspective, it is having almost a demand zone kind of a creation where the delta is getting lost. I mean, I'm almost from the min delta of 15K, it is almost lost more than half of it. This is how the proportion matters, and it's having a bigger lower wick. So a bias for this candle creates an upward bias, especially given the macro context also. This gives a bit of upward bias, but not a strong upward bias, but definitely an upward bias. And this candle confirms that bias because of the big Marbozo type candle with a good delta. So this itself, these two candles in combination confirm that there is an upward, at least an upward bias for the day. But the next candle, which comes at the day's low, day's high, when opening candles high, sees some rejection in terms of some delta getting lost. So market is still in that early Monday morning liquidity gathering phase. So some delta getting lost here, so it's not a good sign if at all someone is long in this short period. So as usual, market I mean, with this sign, market comes confirms the same with the next candle. So always look whether our hypothesis is getting confirmed in the next candle. So it gets confirmed here again. So it's heading lower, but till where it can head lower, we must always keep in mind that we have a demand zone here, right? So this is almost a ready demand zone for intraday. So we must just wait for the market to come closer to the demand zone and bounce. So that probably happened in this candle where with an increased delta, the candle is not sufficiently able to have a downward displacement, and the delta being high, creating a lower wick at the demand zone, create the context for that further entry of limit buyers at this level. So as usual, this bias is confirmed in the next candle. It creates a very big bullish candle with a low delta. So this we have already discussed that if there is absence of aggressive sellers, the market will automatically go up with lower delta also. So this traditional candlestick perspective also, this is a bullish engulfing pattern. And also from this context, order flow context also, because selling has happened and absorbed by limit buyers, there's no much aggressive sellers, so it will automatically shoot up. So as the order flow gives clues at the bottom, and accordingly market rallies on the top. And if you observe, this was the time, I mean, if we are in this bias, could also confirm with the dollar index falling sharply. So it is a strong clue even from a macro perspective also. And the market headed higher. And here is also one more additional concept. Like for example, this we have discussed multiple times. Here we see that the upper wick appears, and we have a loss of delta, but this loss of delta is not major. It out of 33 odd k, 20k is present, so only some 10k worth of delta is lost. You must assume that still the uptrend is intact. It's not a reversal kind of a signal. This you must keep in mind, unless there's an other confirmation, another candle which confirms this bias. I mean, it's like the uptrend is getting exhausted at this level. So what will happen if it is exhausted? It might further do some liquidity gathering exercise if it has to go up, or entry of limit sellers if it has to come down. So if we see in this context, so the market does not confirm the exhaustion next candle. In fact, it is, the delta is healthy. This is a very small candle with delta is also being very less, but this delta, interestingly, there is loss of minimum delta. So there is loss of min delta, so this gives a bit of upward bias, but not much bias as of now, because the delta is very low. I cannot conclude much. Next candle, happens with a higher aggressive selling or profit booking type of candle, where again the delta is bit high, but I mean, we can see that there's still loss of some delta from the min delta. So not much conclusion with respect to, because we mark this high and observe the price very closely, in this range. And this also, if you see again a wide range doji type of candle with a low delta. So again, all this points to the confirmation that in this candle, since candle has come to the extreme lows and extreme highs, and still is able to sustain there. So one must have some positive bias, because candle is sustaining at the day's high. Usually what happens at day's high, some rejection which happens and price comes down. So but still we need a bit more confirmation in that context. Well, the bias is still positive, considering the macros also. And here also the delta is low. I mean, we must not consider this as a loss of delta, because the candle itself is displacing very low, right? So and then here comes a very good signal that the delta is the delta is red, but the candle is appearing green. Now, why this happening at the top in this context gives way for entry of further limit buyers. So this is one more strong positive confirmation that candle is entering bullish despite a red delta. So we can just see this delta has increased here, but the candle is producing a different result, right? So it's like open um, checking of the logic. So price is in the upward point, and then this again we see that it's a indecisive candle here. Again, final liquidity gathering exercise before the upward move. So the bias is still on the uh, upside. There's no downward bias at all being created in this entire order flow if you try to apply the concept. So and the final thing, fire price broke the highs and closed at almost a day's high. So this is how, with the combination of macros, which was very positive at that moment, and order flow, it was hinting a kind of opposite, but it's not. Order flow did not hint at a major positive bias, but because Nifty yesterday was not so strong, but this was the overall context for the Bank Nifty's order flow. I hope this analysis was helpful. Thank you.